We next move on to a short discussion of the documents that are connected to the recording of or performing ordinary business transactions. The source data or source documents would be kind of the raw material which is used to evidence the details of transactions. Let's start with materials just to take as an example and to make this as tangible as possible. When a company is ordering, that means receiving or giving out materials from their inventory, all these movements have to be recorded somewhere according to preset procedures. We've talked about procedures, rules and procedures before. In order to maintain good order within the business. Otherwise, management will lose track of what it owns, what it's handed out, and what it should receive. There's a sense, there's a notion here of accountability at all levels of an organization, and therefore each time someone is using resources of the organization, such use of resources has to be recorded. Now, the recording systems can be manual or they may be automated. It doesn't matter, the same principle applies. There has to be a system of recording that can be checked objectively by and verified by a second party. Now, here's some of the documents we should keep in mind. A purchase requisition form. A requisition is an internal form. It's one department that needs to have some materials bought by or services purchased by the company gets the internal authorization for such a purchase. Then the purchase order is issued. This is going outside the company. It's a specifying what it is the company wants to buy, so the quantity and the price of that which is ordered. When a delivery takes place, this gives rise to what is called a goods received note, and as the name suggests, it will refer to the order number that was made by the customer, and it will describe the goods themselves and also the quantity of goods. Now, within the company, when the goods have been received by the company, now have to be moved from the receiving department to another department internal to the organization. The materials will be issued based on a materials issuance or requisition form. Again, the word requisition indicates a kind of internal approval or authorization. That's got to do with materials that are processed within a company. What about labor? Well, the worker gives his time and effort to the company in the form of labor, and this is evidenced by work contracts. It's the document which will specify how much the worker is to be paid for his efforts. And of course, within HR, within the organization, there will be a payroll function which makes sure that salaries are paid to the workers on a periodic basis, and hopefully punctually. When a sale takes place from the company, then of course the sale itself has to be recorded. This normally will take the form of a sales order. That's the order coming from the customer. Then there's a goods dispatched note. This is showing the fact that the goods have been sent to the customer, and the request for payment will be in the form of an invoice. This is commonly known, commonly understood. There are some other documents which can be generated. For example, if a customer has overpaid for goods and therefore he has an amount due, he will receive evidence of that overpayment as being an amount that either can be converted into cash to get a cash refund, or perhaps to buy further goods with that amount. That will give rise to a credit note. The opposite of a credit note, of course, is called a debit note. It cancels a credit note that may have existed previously. A remittance advice. Remittance refers to the means payment effectively. It's giving instructions as to what the payment details should be. A customer knows he's got to pay, gets an invoice, but he has to know also specifically where to direct his payment to. Does he write a check and send it to the seller, or does he wire the money necessary through a bank account, and he needs to have a destination bank account? And of course, when goods are sold or delivered, a receipt has to be issued to provide evidence, again, documentation to prove that the goods have been paid for. This is common also at the retail level. Obviously, many shops say do not leave the shop without your receipt to prove that the merchant, that the goods that you have bought are really yours, and that you can prove that you have paid for them. Finally, there's a system of coding that can be applied to transactions, and they can follow various types of methods by which a company will keep track and code its transactions. Let's move straight on to a discussion of cost classification and measurement. It is useful to keep in mind that we need to be familiar with costs from the point of view of how they behave. In other words, how they vary with different levels of production or different levels of business activity. One of the distinctions that we need to make if we're talking about a production firm is the costs that are involved in actually producing the goods themselves. And here we're talking about both direct and indirect costs. We'll come back to this further distinction in a moment. And also the variable and fixed nature of production costs. In other words, as we increase the output for a particular kind of product, we may have certain costs which remain fixed, such as rent, and we have other costs which are variable and which will increase with the higher level of output. Against this, we would have non-production costs. These are typically grouped as selling, general and administrative expenses in a typical annual report, or selling and distribution costs. Finance costs also enter into non-production costs. That's one way of dividing up the world for a production firm: production costs and non-production costs. Let's spend a moment now and just look at direct and indirect costs. Direct costs, costs that can be directly attributable to a product. Can you think of what those sorts of costs will be? Well, they certainly will be, for example, direct materials, things that are actually built into the product itself and therefore directly attributable. Another category of direct costs would be labor costs, and specifically those workers who are directly involved in manufacturing the output. So direct labor costs are also going to be included. There's a third category which could be other direct costs which don't fit into either materials or labor. For example, royalties which need to be paid per unit of product that's produced carries with it a specific amount of royalties. These can also be considered to be direct. Just about everything else then that cannot be directly attributable to a product is considered an indirect cost. We mentioned rent before. Well, rent would actually be an indirect cost because it's not built directly into a product. It has to be, the rent has to be spread across a number of different products. So that's going to be certainly an indirect kind of cost. Another indirect cost, we could say from a production point of view, would be the supervisor. Supervisor who goes around and he looks at and makes sure that everybody else is working, is not handling the product directly, and therefore his cost is not built into the product itself. He becomes an indirect cost. Now, we used the word behavior before, and fixed and variable is a useful way to think about the world of costs. In other words, costs that remain fixed or constant in other words, they are not affected by the volume of production. And then their rent, we use that as an example already as a fixed cost. And variable costs, they vary in production. They vary in proportion with the amount of output. Based on our discussion before with regard to direct costs, one can see that direct costs are the quintessential type of variable costs, because for every additional units of output that I produce, my costs for direct materials and direct labor go up. Now, there are other types of costs which have different characteristics. If we take mixed costs, for example, that would be a cost that has both a fixed and a variable element. You could think of a telephone bill, for example, that has a fixed monthly charge, and the variable element of the phone bill will be based on the volume of telephone calls that are made. Then there's another type of cost which is called step costs. It's a cost which moves up abruptly in steps from time to time. In other words, if we go back to the supervisor, for example, if we have the cost of one supervisor, his cost remains constant until such time as I grow my business. And when I grow my business beyond a certain point, I cannot handle the business and supervise it properly with just one person. Therefore, I have to hire a second supervisor, which means my costs go up in one step now to two supervisors. In other words, although it's a fixed cost, it becomes an increased fixed cost. It's doubled, in fact, when I go from one supervisor to two supervisors. That's what we understand as being a step fixed cost. In order to understand and to identify costs, we need to understand how they change as the circumstances change, volume of output in the factory, the capacity, and so on. Okay. Let's just look at one more issue here with regard to direct and indirect labor. So you can see here the supervisor's salary is mentioned as an example, so would be that of a security guard. In fact, these are grouped as what one can call overhead costs. So indirect costs are a type of overhead cost. Also, when we break down direct labor costs, the basic pay that's due to workers is included in the direct costs of the product. The direct costs being known as prime costs. The prime costs, if I just scroll back here, would be these three categories of costs taken together. That would be the prime costs for a product: the direct materials, direct labor, and other direct expenses. Overtime premium, however, bonuses and so on, sick pay, these are items which, while they're incurred by direct workers, they're all accounted for as indirect costs, i.e. as overheads. Now keep in mind, this is a little bit tricky from an accounting point of view, because there is an exception, almost an exception to the exception, if you will. And that is when there is overtime that is incurred as a result of a client specifically asking workers to work overtime, or the company to provide a service which requires overtime, then we would count this overtime payment to the workers as a direct labor cost. This is sort of a special case.